Good morning, traders, and welcome to the live stream. My name is Charles. I come from a community called Piratetraders, where we are focused on the ES, the NQ, and how they move through the auction process. The auction process is basically a way for us to make sense of whatever is happening in the market. And boy, oh boy, is this market giving us some randomness this morning to make sense of. So in the middle of the night last night, China dropped the news that they were reducing tariffs on goods sold to America, or goods from America, from 125% to 10%. That caused a massive change in the market. That massive change in the market caused a lot of short covering. I left this up here this morning just to show you guys how absolutely frustrating it is for me when things like this happen. So let's just backtrack for a second. I just want to waste 1 second talking about this. You know, when we were looking at the market on Thursday, there was a chance it could break out to the upside. Okay. If it had done that, if it had found support there and continued higher, all these weak references that you see, all these green lines that you see right here, these would have been targets for trades to the upside, right? There would have been a lot of opportunity to make money by just, buying the support the next day, taking profits, buying support, taking profits, buying support, taking profits, buying support, taking profits, buying support. It would have been so nice to have all these targets to the upside, but something happened. The news, right? Something came out, markets changed, and we instantly wipe all of this out. So when events like this happen, what it does to us as traders, particularly as day traders, is it makes our lives much harder. It is a gift in the fact that it is volatility, and the volatility gives us lots of opportunities, with large ranges, and that's great. And we love that. And we are likely to have a large range today, and that's great. And we'll take advantage of that. But the downside is it makes predicting what the market will do much, much harder because everything is a reaction. And so that's what we're dealing with today. Today in the market, whatever the market does, whether it goes up, down, or sideways, has nothing to do with what's going to happen tomorrow in the world. It does nothing to do with earnings of companies or this or that or the other. It is going to be a reaction to what happened last night in the market. So the way I would describe this is the market has gotten itself overly long, overly fast. That doesn't mean it can't keep going up, right? When the market has momentum, it can just shock you how far they can push it. They can just keep it going and going and going for days, for weeks. They can keep surprising you with momentum up. So when I say the market has got itself overly long, I am not implying it can't keep going up today. That's not what I'm saying. But I would be extremely cautious getting bullish right now at the market open because you've created a humongous gap, which now needs to at least try to backfill. The gap will likely not backfill today, but to at least try to backfill that gap. And then you have kind of complete uncertainty about what level could end up becoming support. And we'll go through in a second here. I'm going to clean all this up and we'll point out those levels. And of course, we'll watch them throughout the day. And of course, if they're finding support, we'll buy them as along. But I'm just saying it's going to be very hard before the opening bell rings to predict what's going to happen today. I could make an equal case for the market basically just going sideways in the upper end of this overnight range. Probably somewhere between like 58.20 and 58.70, right? Just kind of grinding around up here and spending the whole day. What would that be? The market be doing as a reaction? It would just be cooling off using time. It will say, okay, we went too far too fast. We got to just chill for a little bit and spend some time. Let's give everyone who wants to get out of their shorts a chance to get out. Let's give everyone who wants to get into a long a chance to get in. And let's just spend as much time as we need to spend here. That's scenario one for today. And in my mind, the most likely scenario to play out. Okay. The next scenario could be the market tries to fill the gap. So basically spends the day today working its way lower, working its way back through that overnight range, back towards this previous balance area. Okay, that is the second most likely scenario in my mind. And the third scenario would be the reaction to the market is that it wants to keep this momentum going. So people waking up this morning and seeing that the market is up this much forces them to cover shorts. That starts to create a move. So say from wherever we open to the overnight high, right? We could easily get from there to the overnight high just with shorts covering. just with people who wake up this morning, they're holding on to shorts and they got to get out of those shorts, which is positive pressure for the market. So that could, for example, get us to the overnight high. If we got to the overnight high and we got new buying up here, well, guess what that is? That's FOMO buying. That's people chasing price. They wished they would have bought it down here last week, and now they're regretting it, and so they're buying it up here at the highs. Okay? If that scenario were to happen, it will be readable. We will see what's happening. The market will push to the overnight high, and we will see volume coming in, more new volume above the overnight high. We will see the tick showing momentum, and then the market will continue higher from there. Okay, so I would be extremely cautious as a long this morning. Either just straight up going long right now, that would be gambling and ridiculous, but even getting long at the overnight high today would require a lot of confidence on my part. Because if we zoom out and we take a look at the chart on the monthly time frame, okay, we always like to zoom out for context, and the context matters, right? So we're starting with the monthly. We are now just at the beginning of one time framing higher on the monthly. So prior to this month, we were making lower lows and lower highs on the monthly, which meant it could easily turn around and go lower. Now we have a higher high on the monthly. Okay. So that implies sideways. That implies chop, right? Now we need to spend some time figuring out what's next. Let's go to the weekly, right? On the weekly, we just poked above a previous weekly high, right? This is an area where the market often runs out of steam. It ran out of steam 3 weeks in a row right here. It ran out of steam 3 weeks in a row right here. So the idea that the market is going to open and just immediately blow right through this level doesn't make sense to me. So we'll zoom in and look at the daily. We can see it there as well. Same thing here. Okay. So this was an area where the market spent a month debating where it wanted to go next. It chose to break lower. When we re-entered that balance area, we increased the odds we would move to the opposite end. We have now done that. Okay. That does not increase the odds we will keep going beyond it, right? The odds now are we're going to start hitting resistance and then probably get pushed right back down. So again, I just want to emphasize a large gap up is bullish because it is a sign of momentum. Okay. That can lead to more momentum, more FOMO, more shorts covering, more chasing price. It can shock you how far they can push it. Okay. So I'm not implying they can't keep it going higher, but I am just saying they have gone awfully far, awfully fast. First thing when the opening bell rings this morning. I don't really think the market has decided it's ready to go back up to all-time highs just yet. So to me, this is an area either today or tomorrow for the market to run out of steam and then reverse back down for that gap fill. So I am extremely cautious looking at longs. Not that there might not be opportunity, but that I'd have to be absolutely convinced that it's going to hold as support. Okay. So let me go through now. I will clean up all these old week references because by opening above them, you guessed it, they are all repaired. We've cleaned all that old weakness up. Okay, so now I'm zooming back to the area when we were in here in March. and I'm trying to ask myself what levels were support and resistance levels in March. Okay. So remember, today, the market is likely to try to fill the gap. It is also likely it will not be able to fill the gap. So we know it's probably not going to get all the way back to Friday's high. Okay, it's not going to go that far. We're trying to figure out where might it find support? Where might the buyers start to step in? So the first thing that's jumping out to me is these cumulative nodes over here, right? If I'm looking for support, it's going to be an area where a lot of business has happened in the past. So those are the first things I'm looking at. The second is I'm looking at areas where the time tapered off one direction or another, and where volume tapered off one direction or another. And in particular, where they switch, where something that was acting as support becomes resistance, something that was acting as resistance becomes support. Okay. So first level that jumps out at me is right around here. Okay, that is around 58.20. Why? We got this little node of, man, it's hard when it's popping up like this. We got this little node of liquidity over here. Okay, see that right there? Just a little bit above where we are. We can also see, look on this day, where was the majority of the time and the volume on that day? Right here. What about this day? Right here. What about this day? What was the high of the day? Right there. Okay. So this is an area right here where a lot of debate took place back in late February, early March. Okay. What happened when we came back up? Look at the way the daily high ended right there. The volume and time tapers off there. That was the opening price where we literally could not go any higher. So this is previous resistance. So the question we're going to ask ourselves this morning is, can we today turn that previous resistance into support? So I'm just going to write support. We don't know yet whether this level will hold. We could blow right through it, but it's a potential support. So we're going to mark it. We're going to be aware of it. We're going to be paying attention to it when the market gets there later on in the day. Okay. Next one that's jumping out at me right in here. So again, you notice that large cumulative node sticking out right there. Okay. We noticed that this was a point of control. So the area where the market spent the most time on this day, again, just below it, time and volume tapers off on that day as support. The next day, it tapers off as resistance. The next day, it holds as resistance. And then when the market came back up, it tried to turn it into support and then ended up once again turning it into resistance, which took the market lower. Okay, so this is the next support level that jumps out at me. And then we'll look for one more right around this, which is the biggest cumulative node we have in this general area. And as soon as we click on that, what do we see? That's where volume tapered off on this day, tapered off on this day, became resistance on this day, reversed the market on this day, and this day. And it was a very prominent area on this day. Okay. So that's our last potential support level. So my guess would be, if you put a gun to my head right now, 15 minutes before the market opens, and made me choose what the market is going to do today, made me guess, my guess would be that it's going to come down to either this area around 58.24 or this area down here around 57.86 and find support is what I think is going to happen. So I think we will maybe do a little chopping, and then we'll start to come down, and then we'll find support, and we'll turn around, and maybe we'll get above that overnight high, and we'll come back down, and then we'll just kind of go sideways. This is the type of day I'm expecting today. Okay. First, get them all bullish, then get them all bearish, then get them all bullish, then get them all bearish, but really go nowhere. Just go sideways in a range. If this support breaks, I would be assuming the market is heading to the next support. If this support breaks, I'd be assuming the market is heading to the next support. If the support at 57.54 breaks, things get a little bit complicated. Traditionally, I'd be saying look for the gap fill, right? Look for the market to get back to 57.10. But knowing this market the way it is, I could see it reversing just above there. Not quite getting the gap fill, just to squeeze all the sellers. So I would be looking, the last major support level I'd be looking for today would be 57.20. Okay. So like I said, unfortunately, we can't know what's going to happen today. No one can, because what happens today has nothing to do with anything other than how people react to waking up this morning and seeing this big of a price change, seeing that the market made this big of a move in the overnight. And so they may FOMO into longs. They may short, they may do nothing, and we're just going to have to wait and see. Any questions from the chat on any of that? In the Discord, we got Trader hanging out. Good to see you. And Baya Chaka 6. So somebody from the Star Wars universe. Good morning and welcome. The question here, he says, before every level written on your chart, Charles, is there a date? So not always, but generally, yes. I should always put dates. And I don't do that for myself. I do that for you guys, so that if you're wondering where did this level come from, I can point to it. But I don't really need dates. What I just need is levels, right? If I see, a support level right here that I marked on the chart and I'm trying to figure out what that is, I would just scroll to the left and see, why did I draw that? But yes, everything should have a date on it. Rich, good morning to you. Billy K in the house. Griff is here. Welcome, welcome. Trevor, good morning to you. Grizzly Bull is here. Good to see you. He says, let's get this to 100 likes. I think it's a great idea. We got 91 people hanging out, and we still got 10 minutes till the market opens. So I'd be willing to guess if all 91 of you would push that like button, we could get to 100 today. Smash the like. Pucker Toot in the house. Good morning to you. He says, what on earth causes the market to move high in the overnight? Manipulation? No, it's not manipulation. It's two things that cause this move in the overnight. One is a reaction to the news. So China dropped news. What was it? Tariffs on goods to 10% from 25%. So in China, they're now reducing the tariffs on American goods. That's what caused the reaction. That's what caused bots and computers all over the world to say, oh shit, the stock market is going to be worth more tomorrow. Buy, 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 buy. And they just started buying the market like crazy. Okay. That's what causes this first big impulse move right here. It's just computers reacting to the news. It's not a scam. It's not, market manipulation. It's just somebody somewhere wrote an algorithm that reads the news and takes trades based on it. And that's a thing that exists in the world. So that happened. That's the first impulse move to the upside. And then the other thing is the low liquidity. So during the regular trading hours, so between 9:30 a.m. and 4 p.m., most of the liquidity in the ES, meaning most of the contracts that are trading hands in the ES are not speculators speculating on whether the market is going to go up and down. It is mostly arbitrage. So it is arbitrage between changes that are happening in the underlying stocks, changes that are happening in the indexes, like the ETFs, and things that are happening with the options markets in all of these things, right? So you got the SPY, you got the SPX, you got options on both of those, which are changing things as those options change value and move things around. And then you've got the, other 500 stocks that are in the S&P 500 and the way they're changing and all of that, right? So most of what you see in the futures is just computers trying to keep everything in line, trying to keep everything smooth so that if the SPX goes up, the SPY goes up, the ES goes up, the stocks that are in it go up. Like there's a mechanism that exists to sort of keep everything on a level playing field. Well, during the regular trading hours, that mechanism is turned on. and it kind of forces the market to stay a little more compressed, right? It's a little harder to make large moves when there's that much back and forth that has to happen. Whereas in the overnight, that structure is turned off. The stocks and stuff aren't running. No one's buying and selling them. So the difference is the liquidity. In the overnight, the liquidity is paper thin, which means there's no sellers. So if the market keeps pushing up and there's no sellers to go against it, what's it going to do? It's just going to keep going up and up and up. So you can get these very large, exaggerated moves in the overnight because of the thin liquidity. But then guess what happens when the regular trading hours open the next morning and all this liquidity floods back in? It's got to correct this. It's got to make up for the fact that the market went overly long, overly fast, and it has to give it a chance to cool off, which is why I'm saying, to me, the higher probability today is either sideways at higher prices, which is cooling off with time, okay, or a pullback looking for support, which is cooling off with price. There is always the opportunity of a gap and go. There is always the idea that this momentum can just keep going. But in my opinion, because it happened in the overnight and it was so extreme, the higher probability is that it will retrace. Okay. So that gives us excellent opportunities as a day trader in terms of volatility. If this market starts to sell off today, you could short technically all the way back to yesterday's high. I said I don't think it's going to get there, but you could, right? So there's a lot of money to be made in here. The tricky part will be, don't start trying to take trades until you can answer that question, until you personally feel confident that you know whether the market is either continuing the momentum up, going sideways using time, or pulling back with price. When you can answer that question, then you can enter trades. And I worry this morning it's going to take some time to figure out. I think there's going to be a lot of faking out first. So my guess is there won't be really good, reliable trades for at least the first hour today, because literally anything can happen. And it can happen fast because of the volatility. It can be ferocious. We got 5 minutes till the market opens. Alios is saying it's the U.S.-China tariff news. Maybe as a trader, you should read the news. Here's the thing. When it comes to reading the news, it makes sense. First off, as a trader, you want to be aware when a major news announcement comes out, right? Like you want to find out if some major thing happens, but you can't trade based on the news. You can't choose you couldn't have said, I'm going to go long on Friday, right? When the market was just balancing inside the previous day's range and doing nothing, because I think maybe this weekend China is going to drop tariffs. And I think that's going to cause a big reaction. If you'd have been sitting in front of the computer, you could have chose to trade with the momentum. But even if you'd have waited until I would say above 58.20, I wouldn't have even gone long with that because it could have retraced. So yes, it is important as traders to keep up with the news and to know what's happening in the world, but don't ever take trade ideas based on it. That's my opinion on the news concept. Griff says, is there any world where you would think of a short? Are we taking much lower in that case? Yes. So I would say both as a day trader and as a swing trader, there's a chance for a short here. Again, not this minute, not at 9:57 a.m. because we don't know yet. We could still get a gap and go. You got to understand with momentum, the way to think about momentum is that it is like a speeding train. Speeding trains don't just instantly reverse. Okay. They need to take time to slow down and then turn around and start going the other way. So, we are not necessarily just going to have a day where the market sells off all day today, because that would be the train literally going like, it's not impossible, but it's very unlikely that it would do that. So no matter what, the train is going to probably slow down, meaning the market's going to spend some time going sideways this morning. Maybe it'll last 20 minutes. Maybe it'll last 5 hours. I don't know. The market's going to spend a little bit of time going sideways. So you don't need to force your way into a short. Also, with this speeding train analogy, it could be the train is still going. Like I said, people could wake up this morning and the change in price alone gets them to cover shorts and FOMO buy. Okay. And that could keep this momentum going. We could end up with an update that does a move to 6,000 for all I know. Like, it's possible. Now, that to me is the least likely scenario, but it's possible that it could happen. So you can't short yet, right? You just got to wait. Wait and watch what the market does for the first hour. Let it digest this new information, then look for momentum. Once we've digested the information, is there more selling or buying? Once there is, as a day trader today, I would short and just basically stay short until cessation of the trend. So until the market generated information told me that the market was going to run out of steam, I would stay short. That being said, you may only get to this first support level. You may only get to 58.21. So, if you're shorting close to there, if you're getting short, if you're getting short up in here, you may move your stop below your entry right away in case this bounces as support and then it comes back through your entry. But if this support does not hold, I would feel very confident looking for a move into the next one. So if the 58.20s doesn't hold, you could target a move somewhere between there down to the 57.80s. Same thing from the 57.80s to the 57.50s, and then from the 57.50s to the balance area high. So as a day trader, you could get short, let it go as far as it can, and it just stops you out whenever you get cessation. You could lock in profits, re-enter, lock in profits like that on your way down. That would be how to short as a day trader. Okay. As a swing trader, the short would be a look above and fail of the overnight high. So let's say either scenario, market gets a gap and go and starts higher this morning, and then later on in the day it crashes through, or we get that sideways in this morning. It would be when it gets above that overnight high and it can't stay above it, that's when you look to short as a swing trader. And like I said, as a swing trade, it's a very good trade because we are at that balance area high. Okay. Another way to say that was when we got up to this level the last time, if we could not bring in buyers and keep going, what did the market do? It ferociously turned around and went way down because it couldn't get new buyers up here. That's where we are right now. Same place. So yes, technically they could bring in buyers and they could keep it going, but if they don't, we're going to get another one of these. We're going to get another voracious move to the downside in the days ahead. So right now I'm in wait and watch mode, but I would know very soon if I wanted to short. And we start today with a week high. Fantastic. Okay, so now we are going down to the first support level. That is 58.24. So do you guys see how that happened? How the second the market opened, it was like, and it just shot through stuff. That's, the arbitrage, cleaning things up. The ES was up, however many points, but whatever, Apple stock or whatever wasn't until right now when that opening bell rang. So now they're buying up Apple to even it up, and they're selling futures to even it up to get them to the same level. So we are looking for support around, and this is not an exact level, but around 58.24. We're looking for a bounce. If they can hold the support, the next question we will ask is, can they get back up to the opening price? I think today using the Bookmap, the liquidity nodes will be very, very helpful. So remember, if a lot of what's happening today is reactions to things, you'll see these liquidity nodes starting to change, starting to pop around. So if you have a ton of liquidity above price and price is moving lower and suddenly that liquidity disappears, look for price to reverse. Or if it's moving towards price or towards the liquidity and it suddenly disappears, look for price to reverse there. Okay. So as I'm saying it, what's happening to this liquidity above? It's starting to disappear. So that tells me they're probably going to turn this area around 24 into support and try to push up. Let's see. Ticks, as expected, are way overbought here. So it will be hard to trust this support. I would certainly not be willing to go long on this support. But if the support holds, it increases the odds we will find resistance and keep going if we can't get the ticks back to the zero first. So we're looking for a bounce and we're watching what happens to those ticks. River Rock in the house. Good morning to you. B&E. He says, how about the good news about tariffs? Yeah, great. Is there some other new thing that's going to happen tomorrow, though, that's going to completely reverse this? My guess is yes. DNK says, you're missing one technical signal, the Trump tweet. I know. We talked about this. Somebody posted it on Twitter the other day, gave me credit for bringing this up. Is like, we talked about this at the beginning of the year. We talked about this in January. And we just said that while Trump is in office, particularly those first 2 years, TA is going to go out the window. It's going to happen. There are going to be times where every single thing on a chart is pointing to one thing happening, and the man will tweet, and the thing will completely reverse, and then the next day he'll tweet something else, and it'll completely reverse again because, there's just so much uncertainty with that man. There's just no way to ever know what he's going to do. He doesn't even know what he's going to do. And so it causes everyone to be on edge all the time, right? And it's not just you and me trying to make a few bucks trading. There are money managers managing trillions of dollars of wealth. And when the market does this crazy stuff, they literally lose hundreds of billions of dollars in a night. Like they wake up the next morning and they're like, fuck. And so they're reacting too. So you get just everyone, the whole world is overreacting to everything, which creates these very volatile moves. You can't use TA to predict that. You can't use TA to predict how emotional people will be. To me personally, the tariff news from China, to me personally, does not equate in my mind to a 100-point move in the stock market. That doesn't make any sense to me. But it's not about me. It's about the overreaction of the market. Okay. So we are watching for support here to see if the market can make a good low. Right now, they do not have a good low because they have bad taper at the low. So they need one more poke to get some nice taper where there's less and less contracts near the low, and then they can try to bounce. Once they do, we'll be watching the halfback for resistance. If we don't get resistance there, we'll be seeing if we can get back to the opening price. If we find support here and we pass back through the opening price, it will be bullish. If we find support here and then get resistance, it means we need another leg lower. Let's see what happens. Still have not found a low. Also, as we're pushing into the support, it's a great time to remind everybody today is literally the last day to sign up for the Mastery of Markets and Minds workshop because it starts today. It starts at 11 a.m. today. Be there or be square, whatever that means. Don't be a square. Be in the workshop. Square means you're boring, right? You're a loser. You're not boring. I take that back. Pippin in the house, good morning to you. Momo, welcome. 365 is here, good to see you. Good morning to Arjit and Sheena. Street Salsa in the house. Zari, sorry if I'm saying that wrong, I probably am. Welcome. John H in the house. John H says CPI will dump it. CPI will be that news that reverses the market. Let's find out. Let's wait and see. And Justin says Trump is talking in a few minutes. Well, that could lead to some volatility. We'll have to see what happens. Kevin in the house, good morning to you. Frito says, be cool. Jump in the pirate pool. Ooh, that sounds very fun. Everyone climbing in a pool together, all wet and slippery. I'm sorry. I'm so sorry I said that. I didn't mean to put that image in your mind. Okay. So again, the market is showing buying here, but they have not made a good low. So they need one more poke to the downside to get that good low. Or they're going to need a big poke to the downside. I do not like it, Sam. I am. So they are hammering out a low here. They are bringing in buyers, but it's a bad low, bad taper. So that tells us they still need one more flush to the downside. Here we go. Boom. Still can't make a good low. That is bearish to see. Okay. So we are now recognizing that the market is not bringing in buyers. Okay. So that is decreasing the odds that we're going to go sideways at higher prices and increasing the odds that we're going to go lower today. That definitely doesn't mean you have to jump into a short right away. But the question is, we now want to start looking for resistance, looking for those new sellers to start piling in. So the two areas I'm watching is this node we just created right here around 58.27. That could become resistance for the next push to the downside, or the halfback 58.36 could become resistance for the next move to the downside. Now, remember, if we get a poke down, we get good taper on the low and a bounce off the zero line, that could be the support to reverse. But right now, it looks like we're looking for sellers to take another poke to the downside. Resistance. Okay, so we're now pushing into that first potential resistance, 58.27. Do the sellers come smack the market down right here? Okay, first test, the resistance held. That's bearish to see. Can they continue to hold 58.27? River Rock says, where are the stops being hit? Well, so far this morning, that's not like, stops aren't a big thing right now. So right now we're focused on momentum, right? Which is like, it was momentum that got us here in the overnight. And that momentum was mostly stops getting taken out, right? The whole way up. If you go back to scroll back to the beginning of the stream, at the start, I showed there was like 10 different weak references that we blew through on the way up. There were stops at each one of those weak references. And so when we got to it, we blew right through the next one and right through the next one and right through the next one because we took out all those stops. So now the question is, for today, how do we react to what happened last night? So in terms of stops right now, we're just not there yet. If this market can make a good low, we get good taper, we get a real reversal back up through the halfback, and it gets through the opening price, right? Then we can say there are definitely stops above the opening price for shorts, right? People who've been shorting since the open this morning probably have stops up in here, all right? So we can start taking out shorts down there. And then again, once that happens, we know the longs. Wherever the support was for the longs, the stops will be below there. So if they can't keep the momentum going, they'll come back down later on in the day. But right now, we haven't established yet. Are the traders right now entering trades? We don't even know if they're going long or short. We don't even know if these are new sellers or these are longs, exiting their longs taking profits from last week or shorts covering from last week. Like, we don't know. So we're still kind of in our wait mode for that bigger understanding. And all we can do now is watch support and resistance levels, watch the ticks, watch the Bookmap, and kind of figure out what's happening. I'm going to be talking about this a lot over the next week during my workshop. So if you're one of the people in the workshop, prepare yourself for this. But to me, the real trick to trading, the fundamental difference that separates people who are able to do it successfully and those that aren't, adaptability is the number one thing. But the second thing is patience. You have to be okay with sometimes not knowing. Now, you should always know what to look for. You should always know, where should I be looking for support or resistance? Where might stops be or whatever. But sometimes you just genuinely don't know because there's so many probabilities of what could happen. And so on those days, the best thing you can do is not feel a need to force entries. You can feel a need to force an understanding. You can feel a need to create a bias for yourself as to what's happening, but you don't need to force your way into a trade if you do not yet even know what's happening. That's not a way to trade. So food for thought. This is one of those mornings where there's a potential for a 100-point move today, and it's very exciting, and we all want to be in a trade as fast as we can, but you don't need to be. You can wait and be patient. And that will probably lead to the best trades. And it is particularly hard on a day like today. Okay, so the resistance at this node is not holding, which increases the odds we need to head to the halfback and look for resistance there. I would still describe myself as bearish. I do not think we've made the low. Sook in the house. Good morning to you. Will is here. Welcome, welcome. Mark says, for your masterclass, will it be recorded? I work during the classes. Yes. So all the sessions are recorded and you can watch them later. Generally, I have them posted the next day. Sometimes it takes me 2 days to get them posted, but they will always be there. So yeah, if you are thinking about joining the markets and mind workshop, just head to marketsandmind.com, sign up there, and I will send you an email as soon as this live stream ends with links to join us at 11 a.m. this morning. It's going to be a good one. Hope to see you there. Okay, so the next resistance level we're watching is 58.36, looking for a rejection here. This is a very important resistance level because if this does not hold, if this resistance right here does not hold and the market starts to head higher, it will likely come back through the opening price. Okay? If it comes back through the opening price, that will start to cause more momentum to the upside, right? You'll have anyone who's been shorting so far today getting squeezed and new FOMO buyers chasing up there. So if the market really wants to go lower this morning, first thing, it should turn this into resistance. It should not get back up to that opening price. Let's see what happens. All right, so no resistance there tells us we do not want to be bearish. This is going to be the balance with time, is what the market is telling us right now. So if you recall this morning, we talked about there are 3 scenarios for what the market can do. Scenario number 1, it just goes sideways at higher prices using time to just cool off the big move to the upside. The other is it uses price to cool off the move to the upside. And the other is the momentum just continues to the upside. So right now, the fact that this resistance is not holding at the halfback is a sign that we maybe don't need that big, huge pullback first thing this morning. Okay. We're probably more likely going to do the time one. And if we get above the opening price and then turn today's high into support, we'll look to test the overnight high. If we turn that into support, then we can get bullish. But right now I would not be bullish. I would be looking for a sideways day, likely bouncing around between 58.11 and 58.70. Probably somewhere like this is going to be today. I'll be totally honest with you. I hate that I have to make a decision right now, 30 minutes into the day, because there's no clear answer. But the live stream's over in 5 minutes. So I'm doing the best I can with the time I have. The big takeaway I want you guys to take away from today is the only way the market is going higher tomorrow and the next day and the next day is if we can get above this overnight high today and stay above it. So essentially by the close today, we're up above 58.70. Okay. If we're all the way up there by the close today, they absolutely can keep this momentum going. Anything other than that. Okay. So whether we get a pullback today or we just go sideways at higher prices, I still think on a swing basis, this market needs a dip. It needs to fill this whole gap because we are pushing into this previous balance area high. Okay. So if they can't keep it going today, they're not going to keep it going tomorrow and the next day and the next day. They're just not. So they're going to reverse back down to test this area for support. So today is a very important day for the swing trading bulls or bears, depending on where we close. That I can feel very comfortable making that prediction right now. But intraday, it's just too choppy to be sure. Yep. Everything right now is pointing to me to choppy sideways day here in the upper end of the range. That is what it looks like. So what evidence am I seeing? Well, I'm watching the liquidity on Bookmap, and it's changing sporadically on both sides of the market. So that tells me that a lot of what we're seeing right now is just that arbitrage, right? It's just the market settling itself. There isn't really directional bias yet anyway. And so if you don't have directional bias after the first half an hour, what do you probably need? More chop, more sideways time to pick a directional bias. Okay. Also, the ticks have only just now made it to the zero line. So now is when we really find out, are there more buyers or sellers? Because you can get from positive 1300 back to zero purely causing longs to cover their longs, to just get stopped out. Okay. That can get you back to the zero line. And so now is when we really find out, are there more sellers that'll keep this momentum going down, or was this just cleaning up, the move to the upside? So that's too soon to make a signal there. But the other market internals actually look bullish. If I'm looking at the advancers versus decliners, or I'm looking at the breadth, that actually looks bullish to me. That it could continue to build momentum throughout the day. So that seems more like a sideways at higher prices type of thing than necessarily a massive sell-off day. Okay. If they were going lower, I'd be expecting the market to continue lower for hours, but I don't. I think it's going to find a bottom here very soon. Can't give you the level. I'm sorry. I just can't. It's too big of a range. Could be 58.11, could be 57.97, could be 57.85. I really just don't know, but I'm feeling right now at this moment like that's what it's going to do. It's going to find support and come back up to the open. And then it's going to run out of steam and come back down. And it's going to do that for maybe all day. We'll just have to wait and see. So the momentum is slightly more to the downside, but I don't think it's going to necessarily trend lower all day. With that, I must say goodbye. It's a very busy day for the Pirate. Thank you all so much for joining, and we look forward to seeing you here Monday morning. If you are in the brigade, head on over to the private stream, and we will hang out there. If you are thinking about signing up for the workshop, you got to do it now. It's now. Hope to see you there. Thank you very much, everyone. If you are not a member of the brigade and you are not taking the workshop, head on over and watch Bruce's stream right here on the Bookmap channel. Goodbye, everyone.